if you're here yesterday I was talking about what's going on in the crypto markets, and let's just see some of the top big Bitcoins to cryptos to look at is Bitcoin, Ethereum, Cardano, and those are going to be the three that we're going to evaluate today. Part of the crypto market is that a lot of these charts are readable in the sense that there's certain levels that need support in order for it to continue growing, and if it doesn't experience that growth, there's a bottom floor that will then have its own resistance and start challenging its support to either bounce back up to its ceiling or continue going down. And that's exactly what we're going to be looking at today. And if you guys listened to me yesterday, it was a bloodbath, right? But today was green fields, baby. It was a bounce. It was a beautiful bounce. And this is a type of bounce that you do see normally in crypto markets. But let me tell you, your heart goes nuts. This is not something that you can just like, you gotta sleep like a baby knowing that you have zero control over what's gonna happen in this market. This is just a high risk tolerance, but there are ways in order to check these things out. Now let's look at what we're looking at. So we have, and this is what's amazing, there's analysts going out here and they're telling us exactly what to be looking for. And so I just want to help you guys look at the same things that I use in order to kind of either give my support or kind of like my doubt. And a lot of these things are just numbers. Right here, we see that there was a resistance at 28,000. We hit that resistance and we gained the support from that resistance, bouncing back up, hitting 34,000. That is just unreal. But here's the thing, the resistance is now at 35,500. That's our ceiling now. And so if we keep that strong momentum and that support stays at 3,500, we do have the potential of next hitting 48,000. And so that's something to look at to Bitcoin. But at the same time, if we drop below the 28,000, we have the potential of hitting 18,000. So those are kind of numbers to look at. And these numbers aren't guaranteed. For example, just because the next resistance is 18,000, yes, it could potentially hit 18,000, but what will most likely happen is that it will start getting close to 18,000, and it'll get to probably 20,000, right? 24,000, 22,000, and then in a single day, it'll like, boom, dip to 18 and bounce back up. Not financial advice, but this is been a pattern that's been seen repeatedly through this market. Now, next one is Ethereum. Ethereum right now has taken a big hit. If you were holding Ethereum 3 months ago, you're looking at your profile being 50% to 60% lower from what you had just a few months ago. But there is hope and or resistance. And so if we look at this chart, we see that we have been hitting the same resistance. All these guys are doing is looking at past results. What was the past floor? What was the previous floor behind that? What were the parts where there was resistance, and where were the parts that support then drove it up? Remember, we're looking at this and we're looking at the support here. Guess what? These guys were looking at the exact same support and there was a growth. Is there going to be a growth here? I don't know. It's hard to say. But to not question where, or to not know where your floors are, you're playing a dangerous game. Know exactly how low these things are supposed to go and when it's going too low. Now, as we look at the analytics, we see right here that we have a floor of 1700. This is the very bottom floor, and we did touch that. We touched it barely, just for a split second, because if we look at the charts today, we're back up to, we touched at 2000 again. That's a I believe it was an increase of 8%. And so that was something that it bounced. That was another one. That's our second bounce already today. And so these markets are scary. I'm not gonna lie. This is some high volatility, but if you see, everything grows. They continue to go up. This is just a small period in what Ethereum is. Who knows what's going to happen next? Now, the next one that I really like is one of my favorites. It's Cardano. Cardano has some real world applications. They are pushing some wallets. I want to say some DeFi apps. We are going to do a lot more research in that. So come back. I am going to do a deep dive into Cardano and exactly what that company is doing, how you can even start using some of their products. Don't just look at this as the potential of, hey, this is only an investment. No, this is the start of new technology. This is the start of a potential next Google. This is the start of a potential next Apple. We don't know the potential that blockchain really has. But if you think that using the internet today and giving the advice to someone to use the internet, that it's too late for anybody to use the internet, the value of the internet will never go down in the sense of its value. The same way goes for cryptocurrencies. We are at the very beginnings of what the internet was back then when it was just starting off in the 1990s. We are now looking at this new latest technology. So where's it going to go?
2000. You know what I mean?
And so from there, let's look at its resistant levels. So these resistant levels are here's the thing. As you see these markets drop, let me point out something really, really key that I've enjoyed about Cardano. If we see Ethereum, we see this massive drop. This followed the same type of drop that Bitcoin had. How does it have you as a speaker, Wyatt? This makes zero sense.
I know, I'm the only one up there. I just saw myself and I was like, hey, look at me. Hey, look, I'm not going to fight it. You know what I mean? If it chose me, it chose me. Just don't be jealous.
Get on my screen. All right, so
I can point to it.
Back to the subject. Here, guys, this is the dip that we saw over this last month. If your portfolio dipped, it dipped hard. Now, in that same time period, do you see that same giant dip in Cardano? No, you don't. The support was there. The momentum was still there. Now, we're currently hitting a floor right now, and this should be around $1. This right now is referencing its ADA to Bitcoin, and so the metrics are going to look very skewed in the sense of like 0.0000, but that's measuring up against a $34,000 crypto. When you reference it to the US dollar, right now we're currently sitting at a floor of $1. Now, this isn't the worst. 3 months ago, Cardano was hitting, it was getting close to $2. I believe it hit $1.80, dropped down, and then we saw it going from $1.60 to $1.40, and now it's only decreased probably about, I want to say 20% to 30% compared to about the 50% drop we're seeing in these other large cryptocurrencies like Bitcoin, like Ethereum. And one of the main reasons is real world applications. They are working their butt off in order to make products that will come out to the market. And that's where we see that this is looking strong in our crypto market. This is resisting the current it's a bearish slide right now, and it's not taking the hits as all these other ones, and I see that as a positive message. That's a positive view. So this is not financial advice, but if you are interested in Bitcoin in a long-term hold, check out Cardano, check out Ethereum, don't look at Bitcoin. And if you are looking at Bitcoin, it's because Bitcoin is the flag to start all races. Whatever Bitcoin
is the
does,
poster child of crypto. Everybody, that's like the first runner. That's the big name. When everyone talks about crypto, they always think of Bitcoin. It's like when you think about Band-Aids, what do you think about? You think of Band-Aid brand.
And so if you're looking at this, you're saying, okay, Josh, when's going to be the best time to buy? Well, not financial advice, but if I'm looking at this from a perspective of, you know what, if there's a potential of this breaking past its all-time high, I'm going to look at what that all-time high is. If I'm measuring the distance between here, and it's about over a 20% gain, I might take that bet every single day, every day of the week, because if there is a continued bull market, it's going to fly right past that all-time high. And even if it goes into a bear market, I'm not too worried about this particular one losing as much value as the other ones as they take the hits in a bear market. And so, drumroll, yesterday we talked about Dogecoin And I said, if don't touch it with a 10-foot pole. But if you do touch it, use a 12-foot pole because they made huge gains in the last 24 hours. And so this is something that's just absolutely unreal. If you're looking at the charts yesterday, you're seeing that Bitcoin, Dogecoin dropped down to 17 cents. 17 cents. Now, when I was talking to this, I believe to Wyatt, we were looking at it at, I think, 40 cents. That was probably one of the first times that we brought it up as a topic. And I said, don't touch it. Don't touch it. Don't touch it. It is overvalued. Right now, it is still overvalued. But with 12-foot poles, the risk is greater. And you are poking bulls.
You have to define what a 10-foot pole and a 12-foot pole are. Because you're like, you don't want to touch with a 10-footer. But let me tell you, you touch it with a 12-footer, you're gonna be good. Everyone's decided like, Mom, we gotta go to Ace. Why? I gotta get a 10-foot pole and a 12-foot pole, and then we're gonna make a lot of money on Dogecoin.
Okay. And then we're buying Dogecoin, Mom.
That's what Josh
we're buying Dogecoin.
We're buying Dogecoin. With the sticks? I guess so. That's what Josh said. Let's get back.
So guys, if you're looking at this, yesterday we're looking at this at 2:45 p.m. 17 cents. Look at this growth. At the very top of this growth was a gain of 36%. Where are you at? I saw it. It was around here. All right, let's just say 30%. That's what I just saw right now. 30% growth. Now, everything slaughtered. Everything was slaughtered yesterday, right? Even Dogecoin took its hit. But that's why this is also another coin that I don't want to say don't sleep on it, but you have to take this as a high-risk bet. There's big boys playing with this coin. There's some new developers who are coming in. I would say put some funny money into it. You know, if you got some Monopoly money that's worth anything, throw that in. But don't throw anything that's going to be like, hey, guys, I'm going to buy like my next mansion because like Dogecoin's going to $10. No, absolutely not. This could be the new all-time high. Aside from what it did previously, we don't know
wasn't its all-time high like 75 cents.
It's
still really far off from its all-time high.
Look at this.
It is a hype coin. You gotta take it for what it is, and look at the technical indicators. After the drop, the RSIs, the relative strength index, were probably way bottomed out. And people were just like, hey, this is a great buying opportunity. The MACD must have been way down. And they're all like, hey, momentum could swing up right now. And that's what they did. They took advantage at those low points because of the big drops.
You know, as a general value investor, so I like longer term horizons instead of shorter term horizons. When I look at this chart, right, and I look at, the basic way to look at this is like lower highs, right, and lower lows, and that's usually a sign of a long-term downtrend. I literally see a triangular wedge heading down. Just whoop, like you could draw a line from the peaks almost entirely and literally map out the peaks all the way back down.
Boom.
So it depends on about. Yeah, I'm talking about like that is a very defined geometric shape. So that's something to pay attention to, because you see in the beginning, you see slow adoption, sharp rises, but then you see consistent, even though you have short-term volatility and people are pumping it up, every time they pump it up, it's not as high as it was before. It's always a little bit lower. Like it's like you're just losing steam, like you're fighting, but you just can't keep throwing your punches, just weaker and weaker each time. So those are things to notice. Yes, could it be contracting into a zone where then you're going to see a lot of explosive growth? That might happen if it goes sideways, in terms of the price doesn't move very much for a long time. People look at that as a bullish sign to buy. It's hit a positive floor. Hit a probable floor where it's going to sit there. Or the other hand is it's actually going to slowly keep trending down lower, and it put up a fight all the way down until, until Lassie doesn't make it anymore.
So that's why if you were thinking about buying Dogecoin, I just want to tell you 100%. Don't do it. Don't do it whatsoever.
Not even a 15-foot pole, though? Like, what if I had a 20-foot pole?
20-foot poles only.
The thing
20-foot poles taped with Monopoly money. Then you can bet. Then you can trade.
Just the tip. And
Sprinkle.
The reason B is that these are the ones that will get the most FOMO. you're going to look at this and you're going to say, holy crap, this increased 30%. I saw what it did before. It increased, look at that, 18,000%. Guys, this will never happen again.
There are tons of things you're going to miss out on in your life that you're going to kick yourself for. And it's going to be a lot of these stocks included. But the key is, just because you missed out doesn't mean that buying in now is going to be the best answer, right? Especially after large gains. So, when you see this short-term run up right there, you see like almost vertical line going up, like that is a lot of buying pressure all at once. That's a lot of people exerting an opinion at the same time, right? It's not a gradual growth. That's very quick moves. When things go up very quickly, sometimes things come back down very quickly. So, don't be upset. Yes, it's painful. We all share the same sentiment. Of course, if I went back and put a bunch of money on these positions, I could have made myself a nice fortune, and then I wouldn't have to worry about all my bills and my loans. But that sucks. But the stupid thing to do is then go to throw your money onto the fire and burn it, and then complain that your money's gone, because then you'll get stuck in a cycle where you'll just keep doing that and doing that and doing that, and that it's wasteful. Take a breath. Take a step back.
A secret: use VWAP, volume weighted average price technical indicator. Use whenever you see the volume going down, just wait for it to settle, and then when you see the volume go up more than 10-20% on its average, look at it and then get into the trend. Ride the trend. The trend makes money, and
the volume weighted price average,
set yourself up.
The volume weighted average price is based on, depending on how much volume there is, it tries to find a price that's fair for the amount of volume in the market. So you're not buying or selling at prices that are basically inefficient. So it's a helpful guide because it really tries to ping the price to the actual amount of activity in the stock. So it's a good place to start with your valuations, or at least as an indicator to enhance the full spread of indicators you may be using, because it helps you find better prices and helps you kind of figure out where your entry and exit positions are. We should make videos about these things and explain them more.
Absolutely, because the more cryptocurrencies are in the markets are regulating themselves according to these analytics. And it's the people who are coming over from the stock market, jumping into cryptocurrencies, viewing these things and being like, holy crap, this is like free cake. All my technical indicators are actually working. Where in the stock market right now, we're just like screwed.
Well, that's the thing. You have to remember that these positions, right, these assets are only being traded on technicals, or only being traded on speculation and gambling. When you have market assets, you have them, they're part of funds. They've got people investing for the long term, people investing for the short term. You've got algorithms, high frequency traders. You've got all kinds of volatility and volume from every different class of investor. But generally, when you get to riskier and riskier and more foreign assets, you find that you'll find less and less, like diversity among the investors, and you'll probably find like a select group of investors. And in cryptocurrencies, what you see is just a lot of people trading technicals and betting on the price going up or down, right? Just trying to catch those dips, buy the dips, right? Sell the peaks and continue, right? Playing that game because you just want to make as much money as possible, while it lasts. So,
and for the final part of our crypto section, what we're going to do is we're just going to keep introducing you guys to some of these cryptos that we think you guys should probably just check out. These are guys who also have real world applications, and they also have a really cool name. And this is PolkaDot. You got to remember PolkaDot.
What is it? What is it? I don't remember.
PolkaDot. Come on, you have to remember it after that. You have to try it. All right, so PolkaDot.
What's the name of the coin? I don't.
PolkaDot is live, and they are in their third stage of development. Now, just to put this in perspective, I believe Bitcoin is, I'm not sure if they're in their first or second. I feel like they're in their second now, but their second is still. The problem with Bitcoin is that its scalability is going to be proven a problem in the long term. Now, companies like PolkaDot have seen this, are learning from Bitcoin, and they're saying we can do better. And so PolkaDot has some real world applications. PolkaDot has so much going from them. Google search them. This is just one of those helpful tips. Random Rabbit Josh. Go ahead and check out PolkaDot. And